From the excitement of buying a stock and watching it grow to the satisfaction of earning dividends and making profit, the stock market has something for everyone. So buckle up and get ready to dive into this fascinating world of stocks and stock market investing. But can I explain stocks to you like you're a 10? Can I? Okay, I heard a yes, so I will do that. Have you ever heard of a company like Coca-Cola or Apple? These companies make things that people like to buy, like drinks and phones. When a company wants to raise money to make more of its product or grow its business, it can sell something like stocks. Stocks are like little pieces of the company that people can buy. When you buy a stock, you become a part owner of the company. That means you get a say in how the company is run, like voting on important decisions. You also get a share of the company's profits. So if the company does well and makes lots of money, the value of your stock goes up and you can sell it for more than you paid for it. But if the company doesn't do well and loses money, the value of your stock might go down and you could lose money. That's why it's important to do some research before you buy a stock and make sure you understand the risks involved. So, dear imaginary 10-year-old, that's what a stock is. Once again, please subscribe to this channel as this is going to encourage us to create more videos like this. It's just a few clicks and it will go a long way to put a smile on my face. So, let's talk more about what stocks are and how they work. As we mentioned earlier, stocks are units of ownership in a company. When you buy a stock, you're essentially buying a piece of the company. That means you get a say in how the company is run and you also get a share of the company's profit. Now, you might be wondering how exactly you can buy stocks. Well, there are a few different ways to do it. The most common way is to open a brokerage account with a financial institution. From there, you can buy and sell stocks on various stock exchanges around the world. When you are looking to buy stocks, it's important to do your research and understand the companies you are investing in. You want to make sure that the company is financially stable and has a good track record of making money. You also want to consider the company's industry and the broader economic conditions, as this can impact the company's performance and stock price. So, how exactly are stock prices determined? Well, as we mentioned earlier, there are a ton of factors that can impact stock prices. Let's take a closer look at each of these factors. First of all, a company's earnings are a major factor in its stock price. If a company is doing well and making a lot of money, investors are going to want to buy stock, driving up the price. Conversely, if a company's earnings are weak, investors may sell their shares, causing the price to fall. But it's not just about the company's earnings. Economic conditions play a huge role in the stock market too. When the economy is strong, companies tend to perform well, leading to higher earnings and higher stock prices. On the flip side, in a weak economy, companies may struggle, leading to lower earnings and lower stock prices. Interest rates also have an impact on stock market. When interest rates are low, investors may be more likely to invest in stocks because they can earn a higher return than they would on other investments, such as bonds. But when interest rates are high, investors may prefer to invest in bonds, which offer a higher return. Industry trends can also impact stock prices. If an industry is growing well and performing well, companies within that industry may see the stock prices rise. But if an industry is struggling, companies within that industry may see the stock prices fall. Company news is another factor to consider. Positive news like a new product launch or a successful acquisition can lead to higher stock prices, but negative news like a major lawsuit or a decline in sales can cause stock prices to drop. And finally, we can't forget about investor sentiment. If investors are feeling optimistic about the future and believe that stock prices will continue to rise, they may buy more stocks, driving up prices. But if investors are feeling pessimistic and believe that stock prices will fall, they may sell their stocks, causing prices to drop. Now that we've covered the basis of how stock prices are determined, let's talk about some of the strategies and tools you can use to make the most of your investment. One popular strategy is called value investing. This involves looking for companies that are undervalued by the market and have the potential for growth. Value investors believe that the market often overreacts with short-term news and events, causing stocks to be mispriced. By finding undervalued stocks and holding onto them for the long term, value investors hope to earn above average returns. Another popular strategy is growth investing. This involves looking for companies that are growing rapidly and have the potential to continue growing in the future. Growth investors are willing to pay a higher price for these stocks in the hopes that the growth will result in higher earnings and higher stock prices. Another strategy is growth investing. This involves looking for companies that are growing rapidly and have the potential to continue growing in the future. Growth investors are willing to pay a higher price for these stocks in the hopes that their growth will result in higher earnings and higher stock prices. There are also a variety of tools and resources available to help you inform the investment decisions. One of the most important tools is financial analysis. This involves looking at a company's financial statements and other data to evaluate its performance and financial health. Financial analysts use a variety of metrics and ratios to assess a company's profitability, liquidity, and solvency. There are also a variety of online resources available to help you research and analyze stocks. Many brokerage firms offer research reports and tools that can help you evaluate different stocks and make informed decisions. There are also many financial news websites and blogs that offer analysis and commentary on the stock market and individual companies. Finally, it's important to remember that investing in the stock market involves risk. No matter how much research you do or how well you analyze a company, there is always a possibility that the stock price could fall. That's why it's important to diversify your portfolio and spread your investment across different stocks, industries, and asset classes. In conclusion, stocks and stock markets can be complex and exciting subjects. From understanding the basics of how stocks work to evaluating different investment strategies and tools, there's always something new to learn. But with a little bit of research and a lot of patience, you can make informed investment decisions that help you achieve your financial goals. So, what are you waiting for? Start exploring the world of stocks today. I hope this video has been helpful in understanding the basics of stocks. If you have any question or comment, please leave them below. Don't forget to subscribe to this channel for more investment tips and advice. Goodbye and stay stuck.